Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Tuesday, 16th September. Coming up on the show, the crucial Fed meeting kicks off today with both Stephen Miran and Lisa Cook having a say on interest rates. The US and China have a framework for a deal for TikTok. Market optimism shows no signs of easing, with the Nasdaq, S&P 500 and Japan's Nikkei all hitting record highs. And Cisco President Jeetu Patel tells me where he sees massive growth opportunities. So grab your coffee and let's own the morning. Well, our focus for three things this morning is all about the Fed. First up, the Fed meeting kicks off today. The rate decision will be announced tomorrow, but markets are confident policymakers will cut rates due to a slowdown in the labour market despite persistently high prices. Traders currently see a 96% chance of a 25 basis point cut and a 4% chance of a jumbo reduction. Next thing to know about is that last night the Senate confirmed President Trump's pick, Stephen Miran, as a Federal Reserve Board governor. The move has put Miran in place just in time to cast a crucial vote on the direction of interest rates. Miran says he will act independently, but will only take a leave of absence from his role as a White House advisor and not resign. And the final thing to know is that Lisa Cook will also be able to cast a vote on interest rates tomorrow. The high-stakes showdown between the Trump administration and the Fed intensified as an appeals court blocked the White House from removing the Federal Reserve Governor, Lisa Cook, from her post for now. Well, for more on the Fed and what else to look out for today, my colleague Josh Lipton has this update.
Time now for What to Watch Tuesday, September 16th. Starting off on the Federal Reserve, the Fed is kicking off its two-day meeting on Tuesday, and we'll also be getting a new summary of economic projections, also known as the Fed's dot plot. Wall Street largely expecting the Fed to cut rates on Wednesday. Fed Chair Jerome Powell will be giving a press conference after the interest rate decision. Taking a look at the consumer monthly U.S. retail sales data, that's coming out on Tuesday. Economists forecasting total retail sales to slow to 0.3%, meaning overall spending growth cooled a bit, while core retail sales accelerate to 0.5% on a month-over-month basis, suggesting that people spent more broadly on discretionary categories. And moving over to housing, we're going to be getting a new home builder confidence print on Tuesday as well. That number expected to rise to 33 in September from 32 in August, signaling that builders are slightly less pessimistic, but overall confidence still negative.
Well, the trade talks between the US and China continue this week, but with so many moving parts, how should investors react to them? Well, there seems to have been a significant breakthrough yesterday. The US and China now have a framework for a deal for TikTok. Under the agreement, the social media app will have US-controlled ownership. But tech giant Nvidia has stumbled into problems in China recently. According to Reuters, its RTX 6000D, its newest AI chip, tailored for the Chinese market, has only seen lukewarm demand. And remember, yesterday we told you that Beijing accused Nvidia of violating China's anti-monopoly law. However, this potential TikTok deal is a rare breakthrough in months-long talks between the world's number one and number two economies that have sought to diffuse a wide-ranging trade war that has unnerved global markets. The deal is set to be confirmed on Friday in a call between President Trump and President Xi. Well, Andrew People is editor of The Wire China, part of Wirescreen, the largest business intelligence platform about China. Andrew, thanks so much for joining us. Well, let's start with this trade deal in the negotiations and the fact that this TikTok deal looks like it's been done. How relevant is this for investors and how should they react?
It's part of the ongoing saga that we've seen all year, backwards and forwards between the US and China. Obviously, this is a positive sign that the two sides are getting closer potentially to some kind of lasting deal. So it's a good sign for investors. Why is a trade deal important and a TikTok deal important? I think it removes some uncertainty from the markets. It should be good for both the Chinese and the American economies. But of course, as you'd expect me to say, the devil will be in the detail. How much market access is the US going to get as a result of this trade deal? What are the points that they're going to be agreeing on? We saw last time the phase one trade deal that the previous Trump administration did. A lot of that was around agriculture and purchases of soybeans. Well, we've got to a stage now where China's buying hardly any soybeans from the US. So we have to look at the detail ultimately of what they come to agree on. But obviously, a TikTok deal would be a step forward.
Now, what do you make of the challenges that Nvidia's been facing in China recently? Has Jensen got this wrong for once?
It's a fascinating situation. I think what the Chinese are trying to show is that they don't want to be beholden to the American side as to whether they're going to have access to NVIDIA chips. They want to show that they're not going to be pushed around, that it's not going to be the decision of Jensen Huang or the decision of Donald Trump as to what chips of NVIDIA can get sold within China. And at the same time, of course, China is trying to build up companies of its own, like Cambricon, like SMIC, to challenge the likes of NVIDIA. So that's very interesting. I think ultimately, of course, it's a big market for NVIDIA. China does want those chips. There is a deal to be done. It's an ongoing saga. I think the latest news that we've seen this week, it's just part of this backwards and forwards that we've seen on the overall trade deal this year. So I wouldn't lose faith yet on NVIDIA. I think there's still going to be a market for its chips in China. But it's, as ever with China, it wants to show that it's not going to be pushed around. It's the same with the TikTok deal, really. They want to show that they've got some leverage, that they've got some power, that it's not just all down to what the US wants.
Now, you mentioned a couple of Chinese stocks there, but overall, which other Chinese AI stocks do you think could benefit from the current situation with this sort of uncertainty over how negotiations are going?
It's a really fascinating situation. We've been profiling some of the up-and-coming Chinese AI companies over the last few months, obviously with DeepSeek and the emergence of that earlier this year and the shock that brought to the industry. One thing to say is, as ever in China, the ecosystem is dominated by the likes of Alibaba, Tencent. They have a finger in the AI pie, very much so. And so those sorts of companies, as ever, are going to benefit. But we've been looking, and of course, also some of the up-and-coming companies, they're still private, difficult for investors to get direct exposure to some of those names yet. That's why I'd look out for companies like Minimax, we profiled recently. They're looking to IPO in Hong Kong later this year. They do a lot of consumer-focused AI. Another one we're looking at is Moonshot again. But the interesting thing, I think, that investors should always bear in mind with China and with investing in China is look at these companies and look at to see whether there's any political risk there. Ultimately, these companies, as we saw with Alibaba over the last few years, with its ups and downs with Jack Ma, you've got to get the politics right. So look at the models of these companies. Are they aligned ultimately with what the Communist Party wants for China? So that's a big risk that I think investors need to take into account.
There's been some analysis recently that, the China stock market's worth around $19 trillion. And there's evidence that perhaps in the past few years, investors have shied away from China, but there's evidence that could be coming back. Are you seeing that?
Yeah, a little bit more interest in the domestic stock markets. And of course, the Hong Kong market itself has had a pretty good year, lots of IPOs. So it does seem to be a theme. I think that in general, this push for self-reliance within China perhaps has attracted global investors, ironically, and the policies that, despite all the doom and gloom about the Chinese economy, it hasn't collapsed yet. The data is not stellar, but it's still going, the economy still seems to be on track. So yes, we are seeing some more interest this year than we have in past years.
Andrew People from the Wire China, many thanks indeed for your thoughts. Okay, it's time now for a quick break, but we'll be back shortly with an interview with Cisco President Jeetu Patel. Welcome back to Market Sunrise. Well, AI infrastructure has been the hottest trade on Wall Street in recent weeks. Oracle, HPE, Broadcom, Cisco, and a few other major players are vying for dominance in various areas of the data center and AI networks business. I sat down with President of Cisco, Jeetu Patel, to understand how that race is playing out and what are the strategic moves that can keep his company ahead? Jeetu, you're a fan of agentic AI, and I know that you want more CEOs to use it, but what are the risks?
Well, firstly, it's important to understand what's happening in the world right now, because we are moving squarely from the phase of intelligent chatbots answering questions for us to now shifting to this world of agents, which are going to be able to automate jobs and tasks for us almost autonomously. And this is a kind of, it's going to create some meaningful compounding of productivity, not just for individuals but for organizations. And so that's why I feel like it's a very important kind of transition for all of us to make. We recently, Ramzan, did a study where we found that 4 out of 5, over 80% of companies are planning on using agentic AI, and 2/3 of them are actually finding that they're either meeting or exceeding their expectations in these deployments. So that's the good news. And what we're finding is the longer that a company is engaged in these AI-related projects, the higher the return is, which is, of course, pretty obvious. But what that basically tells you is the right time to get engaged with AI was yesterday, and that we have to make sure that we don't sit on the sidelines and we start experimenting with these technologies so that there's an instinct, some kind of a feel and a judgment on how these systems work. Going back to your question on what are the risks, I think there's always going to be a concern around trust. Are these systems safe? Are they secure? And are we actually using them in a way that can that don't put our company in harm's way? And that's the area that is one of the 3 big impediments that we see with AI, is a trust deficit. The second big impediment we see is an infrastructure constraint, where you don't have enough infrastructure in the form of power, compute, as well as network bandwidth to be able to satiate the needs of AI. And then the third one is a data gap. So those are the kind of 3 big impediments that I see. There's so much upside here that it doesn't make any sense for us to sit on the sidelines. Every company should be starting to experiment with AI.
So, Jeetu, how much has Cisco actually invested in agentic AI then?
So we've invested a fair amount. In fact, if you look at a lot of our areas, for example, in development, we first design partners with Codex, which is OpenAI's tool for developers, where you can basically automate software engineering tasks along with an engineer, with the human in the loop. And so that's an area that we feel is going to be extremely important for making every engineer 10 to 50x more productive than what they are today. We're also seeing that in the customer service, customer success, and customer support areas, automating the first line calls with agentic systems can have a meaningful amount of improvement in productivity for the customer service reps, and more importantly, have a meaningful amount of return for the customer, where the experience gets enhanced quite dramatically. And every single function within Cisco will at some point in time be reimagined with AI.
So, Jeetu, is that millions, billions, or tens of billions then?
It's over time, it'll be it's at least going to be in the tens to hundreds of millions, but it's hard to tell right now, because there's going to be different areas that will move at different paces. But over time, there's going to be a tremendous amount of investment in AI in the billions over the years.
But Jeetu, is there room for all these companies like yours that are making big strides in AI, but also some that are making pretty big claims about their capabilities?
The way I think about this, Ramzan, is whenever there's a hot market that's growing really fast and it's actually producing real value, there's always going to be more of a demand signal. And when there's more of a demand signal for something, then competitors and new entrants tend to participate in that market. So the fact that there's many, many players, and this is a highly competitive market, is indicative of the fact that this is a very, very potent market, and it's actually going to continue to grow in importance as you have more and more adoption throughout the world. Because right now, we are actually constrained with infrastructure. The reason that OpenAI, for example, Ramzan, has 700 million weekly active users instead of 1.4 billion is largely because they don't have access to the infrastructure. It's not because there's a shortage of demand. And so I feel like when there's a high level of appetite for demand for these things, you will actually see more and more innovative ways of different companies participating. And that actually is a good thing because it keeps all of us on our toes and keeps all of us innovating, which is at the end of it, good for the end customer.
Now, Jeetu, in the past, we've spoken about the AI race in China. Who's winning?
Well, it's a close race. So far, America is ahead, but not for a moment would I be relaxed about this, because China is a very capable competitor and a very fierce one. And if you think about what this market has, it's essentially the country that actually has the best amount of token generation ability is the one that's going to have the most amount of economic prosperity as well as the best national security. So the stakes are pretty high. And while America might be ahead right now, we have to continue to remain competitive, and that's what you're seeing the U.S. government do, is actually stay very competitive in this market. And the policies that are getting formed are in favor of making sure that American technologies are the ones that the world benefits from. Because there are two choices. If you don't get the American technologies, you actually will have to use the Chinese ones. So we feel like American technologies from a security and safety standpoint tend to be far superior as well.
Now, President Trump has said he thinks that companies should ditch quarterly reporting and report just twice a year. He said on Truth Social that this will save money and allow managers to focus on properly running their companies. What do you make of this idea?
Well, he's not entirely wrong if you think about it. The amount of capital and effort that is expended every quarter in reporting earnings is non-trivial. And so, I just saw that today. I haven't had much time to reflect on it, but I will say that this is, it's not a bad way to kind of incentivize long-term thinking rather than just a quarterly outlook. Now, there's some benefits to a quarterly outlook, which is that it keeps every company accountable to the street on a regular basis, and there's a rhythm in place. But I think if you were to go to a longer period of time, it has its own benefits for sure.
Jeetu Patel from Cisco, many thanks for your time.
Thank you for having me.
And before we move on, here's a breaking news headline in the artificial intelligence world. Reuters reports that OpenAI has hired one of the former chief financial officers of Elon Musk's XAI, Mike Liberatore. He's starting today as OpenAI's new business finance officer. We'll be back with trending tickers and a look at the gold rally just after a short break. Well, let's start with Alphabet. Google's parent company has just hit a big milestone. It's now worth more than $3 trillion. Shares are up in pre-market after surging 4.5% yesterday, helping Alphabet join Apple, Nvidia and Microsoft in the very exclusive club of companies that can boast a $3 trillion market cap. Google is up more than 44% in 3 months. What's driving Google's rise? On top of positive earnings fueled by cloud growth and a strong ad sales momentum, Alphabet is now benefiting from regulatory relief as recent court decisions knocked back some scenarios that would have forced Google's breakup. Separately, FYI, there's a big headline for Google here in the UK as the company announced it would invest $5 billion in the country over the next 2 years, focused heavily on AI infrastructure and a new data centre near London. The announcement comes just ahead of President Trump's arrival for a state visit. He's slated to land in London tonight. Second ticker up is Webtoon, and the stock is jumping about 48% in the pre-market after a major tie-up with Disney was announced. Disney is investing in Webtoon, and the two companies will build a new digital comics platform, bringing together Disney's 35,000 plus comic titles, Marvel, Star Wars, you name it, under one subscription on Webtoon's new platform. Disney will take a 2% stake in Webtoon, which now faces the challenges of scaling up to deliver on this ambitious project. And next up, the New York Times is in the news this morning. Shares of NYT fell more than 2% in pre-market trading. They're now recovered slightly. This is after President Donald Trump filed a $15 billion defamation and libel lawsuit against the paper and the publishing house Penguin, claiming multiple articles and a recent book misrepresented him and damaged his reputation. Investors and the whole media industry are watching closely as this is becoming a pattern. Trump also sued the Wall Street Journal and CBS's 60 Minutes earlier this year and has repeatedly accused mainstream outlets of lying about him. And finally, there's another asset that's making the headlines: gold. It's hit another record and is now trading above the 3,700 threshold. So we'll be keeping a close eye on it to see where it goes from here, with potential impact on the gold trade from the Fed decision tomorrow. Okay, before we wrap, we only have time for a quick look at US futures. Let's have a quick look at where they are now. The Nasdaq looks set to be heading for its 10th straight day of gains, which is quite something. You can see there the S&P also in the green, and the Dow just sort of near the flat line. Let's turn over to Asia very quickly as well. And Asian markets are, well, the Nikkei, as I mentioned earlier, did actually break the 45,000 barrier in early trade, slipped down below that slightly, but still at a record high. Also in Taiwan, the markets there hit a record high as well. And let's have a quick look at Europe now. It feels like in Europe there's been some profit taking after the recent rally. All the markets there in the red. The CAC Caron, no, closer to being flat though, after Fitch, remember, downgraded the country just over the weekend. Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. I'm Ramzan Karmali. Go own the morning.